Hello everyone, this is Knowledge Topper, and in this video we are talking about investing activities. We already did operating activities. I first made a video about classification or about a definition related to cash flows. Then we moved further and we did operating activities. Now we are looking at investing activities. So what is investing activities? Investing activities is it is all about changes in investment in long-term asset items like fixed asset items. We did operating activities means there's a lot of related to income statement and we did current assets and current liabilities section in our operating activities. If you missed that video, do watch it. I will post the link here in this video. Now we move further and we talk about investing activities, and the main focus is totally based on our long-term assets and changes in investment, like you can say fixed asset mainly. Okay, so let's get into this. So how we classify our investing activities, like changes in investment and long-term asset or fixed asset. So what inflows we have in our investing activities and what outflows we have in our investing activities related to cash. So we will focus on that. So here, from sale of property, plant and equipment means if you sold some property, plant or equipment. Property, plant and equipment, these all are fixed asset, these all are long-term asset. So if you sold that, means that you get some kind of cash, so there's a cash inflow. The second is from sale of investment in debt or equity securities of other entities, means that you had purchased bonds of other entities, you can say stocks of other entities, and now you sold them, means that you sold them like you get the cash. So as you get the cash means that there is a cash inflow. So this is all about these debts and equity securities. So these are all long terms. So when it comes to long terms, we have to focus on our investment section, and that's investing activities. So there's a cash inflow in second section, in second point. The third is from collection of principal on loans to other entities. So like if I give loan to other entity like entity B, so if they return me my principal, so the principal is coming in my way. The principal is coming my way means I receive cash. When I receive cash means cash is inflow, so the cash is increase. So means that there is a cash inflow. Now we'll look at cash outflow, like to purchase property, plant and equipment. Like if we purchase any property or plant or equipment for our use, so we have to pay cash, so there is a cash outflow. Second is to purchase investment in debt or equity securities of other entities. It is the opposite that we talk about inflows related to sale and outflows related to purchase. So we purchase investment in debt like loan or equity of other entities like shares or bonds of other entities, so we have to pay them. When we have to pay them means that the cash is outflow. And if we take loan from other entities, so we have to pay them the loan. So if we have to pay them the loan means that there is a cash outflow, means the cash is going. So what we did is we deduct cash. So how we record in our cash flow statement, we are talking about cash flows from investing activities. Let's consider our example that we take in our cash flow from operating activities. So we got the net cash provided by operating activities 1,72,000. Now just write cash flows from investing activities just after that. And like for example, if we purchase a building, so we just write purchase of building, and the amount is 1,20,000. So means that we purchase a building, means if we purchase a building, we get building and we pay cash. So we pay cash means it is a cash outflow. So when we get the cash outflow, we should have to deduct that amount. So 1,20,000 should be deducted here. Then we have purchase of equipment. We have purchase an equipment, so means that we get equipment and we have to pay cash in return of that. So 25,000 is the amount and we should have to deduct that amount. Like sale of equipment, like if we sold that or a particular equipment, or you can say old equipment, like for 4,000 means that you get cash. you give equipment to someone as you sell that, and you get 4,000 in return. So that 4,000 is a cash inflow. So at the end, what you did is you should sum the amount and then minus it, like from purchase minus sales, and then you get the result that either you get loss or either you get profit. So like if we calculate that amount, we got the 1,41,000 of loss. 120 plus 120 and 25 means 145 negative, and 4,000 positive means 141 negative. So means we have a loss. So net cash used by investing activities. A very important note that you should consider here, a very important point, like if you saw that net cash provided by operating activities in our first heading that we continue, so you see that there's a positive balance. When you get the positive balance, you should write net cash provided, and if you get the loss, you should write net cash used. You should and must consider that. Okay, like if you see that in our investing activities part, net cash used by investing activities, why we write used rather than provided? Because we have lost here. And if you saw net cash provided by operating activities, you saw that we have a positive balance there. So in any case, either it is operating activities, in investing activities, in financing activities, if you get a positive balance, you should write provided, like net cash provided by. And if you got loss, like 1,41,000 in the scenario, or it may be any scenario that you should get the loss, so you should write net cash used by investing activities. So you should remember that. So that is how you can solve this section of investing activities. It is not that difficult. So hope you understand this, hope you learn a lot. We will talk about financing activities in our next video. If you like this video, do subscribe our channel Knowledge Topper and like our Facebook page, and see you in next video. Thank you so much everyone.